Today's video, we are going to cover the great news that just came out, and it's great news for stocks and crypto. We're going to talk about what happened with the Fed meeting. We're going to go into details on it way beyond the 0.25 basis point rate hike that we got. I want to go into the details. We're going to cover the economic outlook, the economic predictions, and we are going to look at exactly what Jerome Powell said. Now, in addition to that, we also got great news coming out of China, and we got great news surrounding the Ukraine war. So we're going to cover all of it in today's video. Now, before we get to all of that, there's one thing I want to say for those of you guys who are joining, is I really greatly appreciate you guys, and thank you for watching this video. You have no idea. It takes a lot of work to be able to come in here and create these videos for you. I get about 5 hours of sleep every night. It takes an incredible amount of work to actually produce YouTube videos. And I could quit tomorrow and go get a job, make twice as much money as I make on YouTube. But I choose to stay. And it's because of you guys. I know I'm helping you out. I read all of your comments. I see when you hit the like button. I see when you subscribe. And it encourages me to keep going and to keep creating these videos for you. So thank you so much for watching. Thank you so much for your encouragement with the like buttons and the subscriptions and the comments. Thank you for everything. I greatly, greatly appreciate it. You have no idea how much I appreciate you guys. You keep me going and you keep me encouraged and you keep me strong so that we can keep creating these videos for you. All right, let's go ahead and get into today's video. So let me get rid of this little splash screen here and we'll get to some of the news. So let's go ahead and start with the Ukraine news. So news came out this morning that Ukraine and Russia were exploring what they call a neutrality plan in their peace talks. Basically, what it would involve is Ukraine would renounce their ambitions to join NATO. They would say they're not going to build up a military based upon foreign equipment. And in turn, Russia will just go ahead and, leave them alone. That's the gist of it. Now, it sounds really good. There are some problems with it, though. First of all, it's in the very early stages, so there's a lot of discussions that will still have to take place. The second thing is that there's a lot of things in here that could be some pretty big obstacles. One of those being that Ukraine would basically have to give up security from Western nations and allow Moscow to provide security for them. That could be a big problem considering the fact that Russia's currently bombing all their cities. The other thing is that, you get this thing here. Ukrainian officials are skeptical that Vladimir Putin is actually committed to peace. The problem is these talks are still amongst low-level people, and so we don't actually have, we don't have the higher level ups that they're actually involved in these talks. So it's still not certain that Putin and Ukraine would actually agree to these terms, but at least they're talking. Now the other problem is there's concern that this is just a bunch of hoopla. It's basically a lie, and that essentially the thought is that maybe Russia's just agreeing to these peace talks to give them time to build up their troops and then invade Ukraine in a bigger way. So, we'll see what happens. It's very, very early stage, but still, it was enough to cause the markets to go up quite a bit this morning. So the markets were up 2% actually this morning, even before any of the Fed information came out. So this was the first bit of really good news that we got. Now, there was other great news coming out of China, but we're going to get to that last because I really want to save the best for last. So what I want to get into now is we're going to talk about what happened with the Fed. So let me just kind of pull this up, and I'll make this bigger so we can see it on the screen here in case you're on your cell phone. So, the basics, really, the gist of it is, obviously the Fed raised their interest rate by a 0.25 basis point rate hike. let me just kind of explain real fast what that means, because there was some confusion in the Discord today. So I just want to help you guys understand as well. So the way the Fed fund rates work is the rate is variable. It's a variable rate, and the actual rate changes every single day, but it's locked into this range. And for the last couple of years, the range has been 0 to 0.25. So that's been the range that it's been locked into. So now that the Fed has raised the interest rate by 25 basis points, or 0.25%, the new range is 0.25 to 0.5. So if you hear numbers like 0.5, like, wait, I thought they were only going to raise it by 0.25. What's going on? That's what's going on. It's a range, and the new range is 0.25 to 0.5%. And then that actual number will change on a day-to-day basis, based upon what's going on. So that's where we're at right now. So that's kind of how it works and everything. So that's the big news, what everybody's kind of looking for. But I want to get into a little bit more details, because if you look at what happened to the markets today, it was wild. The stock market, and I just want to pull up QQQ. If we pull up, 5-minute chart, this is good. So we get the initial rise on the from the Russia-Ukraine peace talks. Okay, then it's just this waiting period. This was just a big waiting period. We're just waiting to see what the Fed's going to do. Okay, that's what all this was. And then just kind of a little dip. This is more of a technical thing than anything else. This is the point. It's 2 p.m. where the Jerome Powell started speaking. This is where we actually got the data from the Fed. And as you can see, the market initially had a major drop, and then it turned right around and had a major rise. This is kind of the mid-speech turnaround that I was warning you guys about in yesterday's video. And so what happened? Why did we get a major drop and then turn around and get this major rise? What in the world happened? So what I want to do is just kind of go over some of the economic details, and we'll go over a summary first, and then we'll go into detail. So this is kind of a good summary here. Let me see if I can blow this up and make it a little bit bigger for you guys so you can see it. Cool. So to go over some of these numbers, the Fed is now expecting the actual Fed funds rate to end the year at 1.9%. Now, in order to end the year at 1.9%, the Fed will have to do a 0.25 to 0.5 increase at all 6 of their remaining meetings. So it's really important to understand that every single remaining meeting is going to have a rate increase. That's what the Fed is now expecting. Now, in addition to that, they have increased their inflation prediction to 4.3%. Previously, it was 2.6%. So they've really increased their inflation prediction, even though their prediction is still significantly lower than where it is right now. This is their year end. So they think that this is going to have a median of 4.3% by year end. I mean, based upon the fact we're at 8% right now, it's probably going to be significantly higher in March because of oil. Like, there is, in my mind, I think the Fed is still a little loony here, but we'll see. I don't know. We'll see. They're basically expecting massive decrease in inflation towards the end of the year. If it happens, maybe we can hit 4.3%. If not, we're going to come in a lot higher than that. But that's where they're projecting. Now, the U.S. economic growth, this is the what's called real GDP, or inflation-adjusted GDP growth. This is GDP growth minus inflation. And so the Fed is now expecting the economic growth, or real GDP, to come in at 2.8% this year. Previously, they were expecting a 4% growth in GDP. And basically what that is, the difference, the 1.2% difference here, is the increase in their inflation numbers. So basically, they're expecting GDP growth to pretty much be the same, but the real GDP is decreasing because their inflation predictions are increasing, because this is GDP minus inflation. So that's what's going on there. Now, one thing I do want to point out about this real GDP, or inflation-adjusted GDP, is that if this number falls below 0 for 2 quarters in a row, then that is officially a recession, okay? So just wanted to let you guys know about that. If it falls below zero for 2 quarters in a row, that's officially a recession. Now, regarding a recession, Jerome Powell said he does not see a recession happening this year because the economy is still strong. And he's absolutely correct. All of the recession indicators that I've been going over there for the past few months point to a recession starting next year, not this year. So Jerome Powell is absolutely correct. There's no indication that we're going to get a recession this year. Okay, that's the summary. Okay, that's like the big high level summary. So what I want to do now is I want to get into the details. Okay, and kind of explain sort of what happened. So we're gonna get into these details here. But before we do, I just want to compare it to the chart so you guys can understand how the markets reacted to all this information we're about to go over. So I'm going to read the information from what came out first to what came out last. So I'm going to go in chronological order as far as what was discussed and talked about. And what you're going to see is all of the economic data, the economic predictions came out first. So the 6 rate hikes this year, the increase in inflation, the decrease in GDP, all of that information came out first. And that's where we got the initial drop in the markets. Then once that came out, then Jerome Powell started speaking and started talking about, just kind of his reasonings. And long story short, Jerome Powell buttered up the markets and really gave a very rosy, dovish outlook on the economy. That's why we saw this big spike upwards. So we're going to look at that. We're going to talk about it. We're going to go over the technicals. But first, let's just go into the details and what actually happened during Jerome Powell's speech. So let's get going. And I want to start with this. So the Fed raised interest rates by 25 basis points, as expected. The Fed sees 6 more rate hikes this year, 6 more meetings, 6 more rate hikes. So a rate hike at every single meeting. Now, in order to get to 1.9%, just to do some real quick math for you guys, if we have 6 more at 0.25, that's 1.5. We're currently at 0.25. That's 1.75. Now, again, it's a range, so we're really between 1.75 and 2. So if we get 6 more of 0.25, that puts us in a range of 1.75 to 2, which is the same thing as 1.9. So basically, the Fed is saying they expect to do 6 0.25 rate hikes, 1 at each of the remaining meetings. Now, let's continue on. This was that was just, okay. So initially, the Dow erased gains as the Fed raises rates and indicated more hikes are coming this year. And that's what I just showed you guys on the chart, that initial drop. Then the Fed raised their inflation forecast, cut their GDP expectations. I just went over that. Again, that's what caused the markets to drop. And then, okay, that was somebody else. Don't care. So future rate hikes will come with caveats. So again, they have a dovish approach to tightening. This is kind of a problem because inflation is still really big. But let me go into a little bit of explanation of what Jerome Powell said and why they're being so dovish. In order for the Fed themselves to stop inflation, inflation's at 8%. In order for the Fed themselves to stop inflation, they would have to raise interest rates by double the amount of inflation, or 16%. So interest rates would have to be 16% to stop inflation. And yet the Fed is saying, yeah, we're going to go up to 2. So 2% versus 16%. So what's the difference? That's not going to stop inflation at all. So basically, Jerome Powell is saying, look, we can't stop inflation. I mean, we can, but we're not going to because it will cripple the economy. So Jerome Powell is now calling on Congress to step in, and Congress has some other tools in their toolbox that they can use to slow down inflation. Part of that is decreasing government spending. We talked a little bit about that in a video, I think it was yesterday or the day before. It's not full-on austerity, but just any decrease in government spending will slow down the economy. And so essentially, Jerome Powell is saying, look, the government is going to have to fix this. They're going to have to slow down government spending. They're going to have to increase supply and production of raw materials and goods. So they're going to have to help truckers out to get more goods shipped across the country. They're going to have to help oil companies out to get them to start drilling more. They're going to have to really get into it and really help out the economy. There's only so much the Fed can do without causing a major recession. So that's what's going to kind of come up. Just a heads up that we're going to talk a little bit more about a recession, but basically no recession this year, but we could get one next year. Okay, so let's keep it going here and see what else came out. Again, this is in chronological order. So people saying raising interest rates could freeze too fast, could freeze the economy. And that's absolutely correct. That's what the Fed was saying is, we can't bring it up to 16%. It will destroy the economy. So the Fed, this is Jerome Powell again speaking, said he sees the risks weighted to the upside for inflation. Let me just read this because it's kind of hard to explain, but Jerome Powell acknowledged the big jump in inflation. He said that inflation is likely to take longer to return to price stability goal than previously expected. Price stability goal is 2% inflation. Powell added that participants continue to see risks as weighted to the upside. Now, essentially what he's saying there is he thinks inflation is largely caused by short-term factors that are going to correct themselves over time. For example, the Russia-Ukraine war that has caused oil prices to skyrocket. The Jerome Powell and the Fed see that that's going to come down. Wheat prices, nickel prices, palladium prices, all of these raw material prices, commodity prices that have skyrocketed over the past few weeks. Jerome Powell thinks they're all going to come back down once this whole Russia-Ukraine war is resolved, sanctions kind of get taken care of, the countries in Europe and the U.S. find alternative supply chains, and he just thinks it's kind of all going to resolve itself, right, in some big, perfect hippie harmony. I don't personally believe that, but that's where the Fed is right now. So we'll see. Then continuing on, this was really big news. The Fed to announce balance sheet reduction at a future meeting. Now, remember, as I said in yesterday's video, if it had done a 0.25 basis point rate hike and then also done a balance sheet reduction, that is selling off bond assets, that would have caused the markets to go down quite a bit. However, they didn't do that. They did exactly as expected, 0.25 basis point rate hike, and they are going to do their balance sheet reduction at a future meeting. Most likely, that's probably going to be May. So right now, the market's going to have to price in a May 0.25 basis point rate hike and a balance sheet reduction. What that means is as the Fed sells off bond assets, so it's going to increase yield rates. So the selling pressure on bonds obviously will push the price down. As bond prices go down, yields go up. So this is a way of increasing interest rates on things like mortgages and auto loans without increasing the Fed funds rate. And you do it in the bond market. So we're going to see the 10-year Treasury yield start to really go up as the Fed starts to reduce their balance sheet. And as the 10-year Treasury yield goes up, that is going to cause that inverse in the 2-year and 10-year that I've been talking about. That is an indication of a recession. So we actually saw that 2-year, 10-year yield curve drop again today. And that's a lot because of the Fed now saying they're going to reduce their balance sheet. So it's going to cause bonds to go down. It's going to cause yields to go up. It's going to increase interest rates on mortgages and auto loans and credit cards and all that stuff without actually increasing the Fed fund rate that much. So it's another tool in the Fed toolbox to increase interest rates and help curb inflation. Okay. The next thing is Powell said the chances of a recession are not particularly elevated. Now, more specifically, Jerome Powell said the probability of a recession within the next year is not particularly elevated. Basically, what he's saying is we're not going to get a recession in the next 12 months. And that's absolutely correct. If you look at all of the economic data, all of the forward indicators that I've been going over the past month, none of them indicate a recession anytime in the next year. All of the indicators point to a recession starting sometime between the next 12 to 18 months. That is somewhere between April and October of 2023. So Jerome Powell is basically saying, no, recession's not going to happen within the next year. I completely agree with that. I've been saying that. So we're on the same page there. Okay. said every meeting is a live meeting. And this was in response to a question on what would trigger the Fed to adjust the pace of its rate hikes. Basically, what Jerome Powell here is saying is that, we're just going to have to take it meeting by meeting. We're going to have to take it CPI report by CPI report, jobs report by jobs report. We're just going to have to see how the economic news comes out and decide, from there. They can't really give a prediction. And that's pretty common. That's pretty much what Jerome Powell says every single time he speaks. So nothing new there. He then said that he expects inflation to return to 2%, but that the comeback will take longer than expected. And this kind of has to go with what we said before, where it could be 2, 3, 4, 5 years before we get back to that 2% inflation that the Fed likes to get to. And then he said that monetary policy starts to bite with a leg. Now, this is really important, okay? Really important. So here's what you have to understand is that all of the interest rate increases that the Fed is doing right now, the selling of bond assets, it takes time to actually affect the economy. So inflation will probably keep going up until the things that the Fed is doing starts to take an effect. And specifically, it takes anywhere from 30 to 45 days for these things to really start taking effect. Now, interestingly, when it comes to the Russian sanctions, Biden also said that sanctions take 30 to 45 days to actually start taking effect. And yet we saw commodities prices and everything else skyrocket. A lot of that has to do with the fact that the commodities markets are forward looking. So they were expecting a forward hit to the economy. And the stock market's going to be the same way. Even though monetary policy may take 30 to 45 days to actually affect the economy, the stock market is going to be forward looking. It's going to expect that to start happening based upon whatever the Fed does. So essentially what Jerome Powell is saying here is even if inflation continues to increase, don't worry about it. Even if we hit 10, 11, 12% inflation, don't worry about it because their policies are just taking time to actually work. We'll see how the market actually responds to that. Okay, the next thing is we just talked about the stock market rebounding and start going back up. And then it just went into technology and everything else starting to rise. And then Powell said that price stability is needed for sustained maximum employment. Now, this is really important. So essentially what he's saying here is if prices keep going up, if we keep getting inflation, then people who have jobs are going to end up being able to buy less and less and less over time. And so the people who have jobs are going to need their wages to increase in order to afford basic things like gas and rent and food and those sorts of things. So the problem is if wages keep increasing, then prices are just going to increase too. So if prices go up and then employees need more money to be able to afford things, then salaries go up. And then as salaries go up, the companies that just increase the salaries have to increase their prices in order to pay for those higher salaries. And that causes prices to go up, which means salaries need to go up, which means prices need to go up, salaries go up, prices go up. And what we're talking about here is what's something called a wage price spiral, where wages and prices just keep going up and up and up and up and up and up and up. And it just gets out of control. And we either enter hyperinflation or stagflation, neither one of which are good for the economy. And so this is a major problem. So basically, Powell's saying, look, we need some sort of price stability in order to stop this and get our maximum employment and get everything under control. Now, in January, the jobs report showed a 9% year-over-year increase in real wage growth. So January was showing a wage growth spiral. However, in February, the wage growth was 0%. So it showed that wage price spiral was now gone. So we're going to have to kind of take it, jobs report by jobs report. I will say that in the past of jobs reports, we've been looking at the unemployment numbers and the jobs added numbers. But now what's going to be, since the unemployment rate is actually really low, it's below 4%. What we're really going to be looking at now is the wage growth. That is going to be the big thing we're going to have to keep our eyes on in every single jobs report from here on out. What was the wage growth? That's what we need to know. Because if wage growth exceeds inflation, then we know we're entering a wage price spiral, and that's really bad news for the economy. However, if wages stay below inflation, That's really good news for the economy because it means employees are unable to buy as much stuff, which is going to decrease demand, which in turn will decrease prices, which in turn will decrease inflation. Bad for employees, but good for the economy. Okay, let's keep going on this. And what's next? Powell indicated the balance sheet reduction could start in May. This was another question. He said, balance sheet reductions would come at future meetings. When will they actually come? And Powell said May. So basically, their very next meeting, they're going to start reducing the balance sheet, which will increase or lower bond prices, which will increase bond yields, which will increase the interest rate on things that you and I use, like mortgages and cars and credit cards. So Powell said there's a misalignment in the labor market, but not a wage price spiral. And that's just based upon the February numbers where the wages grew by 0%. So basically, Powell's saying there's not a wage price spiral yet, but we do have a misalignment in the labor market, meaning that wages are not keeping up with inflation. So it's possible that we could get to a wage price spiral if wages go up. So this is something we're really going to have to keep our eye on. And that's it. That is a full recap of the Fed meeting and the great details and why the market rose so significantly when Jerome Powell actually started speaking. The actual economic data was really bad, but Jerome Powell was extremely rosy and dovish, and that's what caused the market to just absolutely skyrocket. Okay, the next thing I want to do is I want to go over the China news, and I'll go over some technicals, and then we'll get to your comments. Sorry, this is a really packed video. There's a lot to go over today. So let's get to the China news, and this is amazing. Yeah, you guys know from prior videos, I said I would not buy Chinese stocks. Guess what? We went long on a Chinese stock today. We'll get to it. We're up a lot of money. It's amazing. So Chinese stocks are trading in the U.S. skyrocket after China signaled support for shares. That's right. China said that companies publicly listed in the United States would now be supported and approved by the Chinese government. Further, China also said that they were going to cut back on the crackdown on tech stocks. And I mean, this was just amazing. So ADRs, VIEs, there was a lot of fear and FUD about the delisting and all this stuff. Guess what? All that FUD is gone. It's out the window. It's gone. All the China FUD is gone, guys. So Chinese stocks, what did they do today? They absolutely skyrocketed. I mean, skyrocketed. Guys, you got to check this out. Look at this. Let's pull up NIO, NIO. Ready for this? Go pull the daily chart. Woo-wee, NIO up. Oh, come here. 25% today. NIO up 25%. Let's do another one. BABA, Alibaba up 36% today. I don't know what, JD, 39%. Guys, you name it. Chinese stocks skyrocketed today. Now, what do we do? So this morning, BABA opened up and it was kind of hovering right around this 10-day EMA. And if you're a VIP Discord member, I actually post my trades before I actually make the trades, but I also discuss what I'm going to buy or sell before I actually do it. So there was a lot of discussion this morning in the VIP Discord where we were going over like, man, I don't know. It was like I don't know if it was tough. I was really going back and forth on whether or not I wanted to actually open a bullish position on Alibaba or not, because or NIO or JD or any of them, because they were really hovering here around the 10-day EMA. I was like, yeah, we got a really big jump. It was up about like 20-25%. And I was like, but it's still below the 10-day EMA, so it's still technically bearish. So I was waiting. And then I kind of saw it get above the 10-day EMA. And then on the 5-minute chart, when I'm day trading, I use something called a VWAP, which is this red line here. And this morning, I noticed that Alibaba kind of got above the VWAP and it was staying there, which was really bullish. And I was like, you know what? I'm going to go ahead and go long on Alibaba here because this is very early, very risky, but it's also very bullish. So what I did is I wanted to do an option, but of course, when you have a huge run up like this, the volatility is through the roof and options are very, very expensive. So you definitely do not want to be a buyer of options when implied volatility is like insane. So what I did instead is I sold options, and very specifically, I sold a BABA credit bull put spread. And let me pull up Twitter, see if I can get that pulled up for you guys. You guys can kind of see it. Let me pull up my profile here, and here it is. So this is what we did, and I'll just kind of show you the chart here so you guys can see it. So we opened up I sold a $95/$100 April 14th put option on Alibaba. So basically, if Alibaba closes above $97 and make money, if it closes above $100, I get a max profit of $300. And if it closes below $95, I get a max loss of $200. So basically, I'm betting that Alibaba is going to be above $100. And if it is, it's sorry, this is going to be a, let's see. Come on, calculator. I'm going to calculate the profit potential on this, guys. Well, I don't know. We'll get to it at some point. Sorry. I got a very old computer, 150%. So I will make a 150% profit on BABA if it continues to rise. It just has to stay above $100. That's all it has to do. Now, at the time I opened this, it was trading at around $95. And yeah, it was right in here. It was like what, 90, 91, $92. And it ended the day at 105. So we are 100% at max profit at this point. This is looking really, really good. I'll just show you how much we're actually up on it. So pull this guy up here. 1 second. Here it comes. There we go. 32%. So we're up 32% on this BABA vertical credit bull put spread right now. And again, I alerted on this before I bought it in the VIP Discord. I also let them know exactly what I bought when I placed the order, because it did take a little while to fill, because I did use a limit order to try to get a good price. And then once it actually filled, I put it up on Twitter. So, you know, there's no reason to make money while the market goes down, or there's no reason not to make money while the market goes down. We're doing it. You guys can make a ton of money. Just to let you guys know, if you want to know everything I buy and sell before I actually place the trade and before it actually is filled, I post all my trade alerts on the VIP Discord. You can get that at, I think it's up on the screen here, stockcurry.vip/VIP. And then if you don't want to pay and you just want to know what I'm buying and selling, I post all the trades after the trade is filled on Twitter for free. So if you just follow me on Twitter at twitter.com/realscottcurry, I post all my trades there completely free of charge. You just have to follow me and you'll get all the trade alerts. So like I said, if you want to know, if you don't mind waiting until after the trade is actually filled, you can just follow me on Twitter and it's totally free. If you want a lot more detail, like why I'm placing the trade, what I'm thinking about buying, you want to know before I actually place the trade, then you can just do the VIP Discord there at stockcurry.vip/VIP. Okay, anyway, so let's get back over to the China thing real fast, and then we'll get to some technical analysis, and then we'll get to your questions. So regarding the China thing, the last thing I wanted to point to is they called for a closure on tech crackdowns, meaning they're no longer going to crack down on tech stocks, which is amazing because Alibaba got absolutely destroyed because of this. And one of the reasons I chose Alibaba instead of NIO, I was really kind of teeter-tottering between NIO and Alibaba. I chose Alibaba because they're actually profitable and they had an actual PE ratio of 10. So I was like, yeah, that's the one. We're going to go with that because it would have an actual PE ratio. I can see it's extremely undervalued versus NIO, which is still more of a guessing game or still, future growth. It's still more of a story, speculative hype thing. And those stocks just aren't doing well right now with rising interest rates. So I wanted to stick with something that was actually profitable. And that's why I chose Alibaba here. So basically the days of worries about U.S. delisting stocks on top of concerns about economic growth had sent Chinese stocks plunging. Those days are over. And yeah, I mean, we still have to worry about the Chinese economy, of course. Maybe we have to worry about Chinese sanctions. But for now, it's just 100% bullish on Chinese stocks. So for months now, I've been saying I won't touch Chinese stocks. Well, that's over. We are in now and we are making money. Okay. that covers everything there. Let's go over some technical analysis real fast, and then I'll get to your questions. So I really want to just focus on the markets. Let's start with the QQQ, which is a NASDAQ 100 ETF. Let me see if I can pull up on the screen for those of you guys who can't really see what we're talking about here. Man, I'll have to do it this way. So one moment, and I want to put this up on the screen so you guys can see it. And there we go. And up. Okay. So we're going over QQQ, which is a NASDAQ 100 ETF. And what you can see here is that the QQQ got this golden cross on the MACD. That's when this gold line crosses above the blue line. It's called a golden cross. And it's an indicator that the stock market has turned bullish. In addition to that, we also got a candle closing above the 21-day EMA. This is another indicator that the stock market is turning bullish. We also have the RSI rising off of a near oversold territory. That's another indicator the stock market is turning bullish. Final 100% confirmation will come if the 10-day EMA, this little brown line here, crosses above the 50-day EMA, which is this little light blue line here. So if we get the 10-day EMA going above the 50-day or the 21-day EMA, 10-day above the 21, that will be confirmation of a rebound. But for now, we have 3 out of 4 technical indicators pointing to bullishness in the market. We have the candles bullish, the MACD is bullish, the RSI is bullish. The only thing it isn't quite 100% bullish here yet are the EMA levels, which means the 10-day is still below the 21-day, which is still bearish, but everything else has just turned bullish. And we'll just pull up SPY also just for a comparison here. And let me put this up. This is going to be an S&P 500 ETF. And let me get that up on the screen for those of you guys who can't see it. So SPY, we got the same thing. We got a golden cross. We got a rise on the RSI, golden cross on the MACD. We have the candle above the 10-day, 21-day, and 10-day, 21-day, and 300-day EMA. So same exact thing as QQQ. We have 3 out of 4 indicators that are bullish. We'll just pull up a DIA real fast and check that one out as well. For those of you guys who don't know, DIA is a Dow Jones Industrial Average ETF. Oh, that was quite a thing to spell. And there we go. So DIA, we have a golden cross on the MACD, rise on the RSI, candles above the 10-day, 21-day, and 300-day EMA. Exact same thing we have in the SPY. So again, 3 out of 4 indicators are bullish. So the markets are really, really bullish on the technicals. Now, the one thing I do want to point out is this. The markets are really extremely bullish. There's no doubt at all about that. However, until we get the 10-day and 21-day EMAs crossing, we will not have 100% confirmation, which means even though there's a really good chance we're going to keep going up, there's still a chance that we could bounce off of like the 200-day EMA, for example, and just keep going down. Or on QQQ, for example, I drew a couple of support and resistance lines here. We have support at 300, resistance now because we're below it. We have resistance at $340. So we may have struggle getting above that. I'm going to pull up the 5-minute chart on here. And look what happened in the after hours, man. This thing got right up to that resistance line. And I think we got like one candle above it and then it fell back down. So this is really strong resistance on the NASDAQ QQQ. We're going to have some struggle getting over that. Let's go take a look at the futures real fast and see where the futures are right now. Just pull up CNBC, and futures are pretty much flat. I mean, down what, 0.2%, 0.1%. That's basically flat. So the futures are flat right now. Oil, let's see, oil, wow, below $100. So it says it rose back up a little bit here, but as you can see, we are below $100 in oil right now. Major drop. That's going to be good. That's actually bullish for the markets. So we'll have to keep our eyes on that. And then finally, let's go take a look at the 10-year Treasury. And we have a drop on that. Guess what? That's bullish also, guys. So we had a rise up earlier, 2.16, but now we're down to 2.13. Yeah, this is everything. Everything is bullish. So now the question is, how long does the bullishness last? I had originally predicted we could be bullish through the end of this week, but man, this is really bullish, especially with the China news and everything. We could see bullishness continue possibly for another 2 or 3 weeks. We'll have to see. I like I said in a prior video, when we're in a bear market, what ends up happening is you end up getting a zigzag pattern down. So it kind of goes down, then it rises up, then goes down, rises up, goes down, rises up, goes down. It doesn't go straight down. And we kind of saw that back here. Remember where we were dropping and then we had this big run up. You guys remember that week where we were up like 5%? And then what happened? It started going back down again. And then we got a little bit of flat kind of last week and then went down again. Now we're getting a big rise up again. This is how bear markets work. I mean, I could pull up the 2008 recession and you guys could, it'll take too long to scroll on that, but let's go over to the weekly. So if I pull up the 2008 recession here, I mean, it started way back here. We got a drop, rise, drop, rise, drop, rise. And then this is when the actual recession started and we got a major drop. But this is kind of how we're kind of in this period right here, right now, honestly. We're kind of like here, really. So, I mean, we could be ready for this leg up. This could be what we're seeing right now is this big leg up. This was, by the way, guys, this period, this was a 3-month rise on the markets before we got another leg down. So, this is what happens. We kind of get a rise back up, but not quite to the previous high over here. A drop, a rise back up, but not quite to the previous high over here. A drop, a rise back up, but not quite to the previous high over here. And that's just kind of how a bear market works. So we go and we take a look at the QQQ for today. And again, this is all technical analysis. So nothing really fundamental here. But if we got a drop, a rise back up, not quite to the high, drop, rise back up, not quite here, drop, rise back up, not quite here, drop, rise back up. We'll have to see if we can get above this level or this level. I doubt we'll get much above 380. My guess is we'll probably rise up to about 360, somewhere in here, before we fall back down. So I think we'll probably go up. What would 360 be on a percentage wise? It'd be about 20 more from here divided by 340. So maybe about another 5-6% rise in the markets before the bearishness continues. It's my guess, just based upon the technicals. It's looking really, really bullish right now. Now, extremely short term, looking at tomorrow, it's anybody's guess, but man, this thing is bullish, bullish, bullish. Okay, so that kind of goes over the markets and the news. I just want to spend a few minutes going over the questions and going over you guys' comments. Again, I really appreciate you guys. I appreciate you sticking around, listening. I appreciate the likes and the subscribes and your comments. Guys, it keeps me going. This is why I do it. I do it for you guys, and I really, really appreciate it. Jason here, we appreciate your work, Curry. Thank you so much for the kind, encouraging words. You have no idea how much that actually means to me. You guys are just amazing. Alaskan Trader, thank you so much for your kind words. I really, really appreciate it. You guys are just absolutely amazing. I appreciate you guys so much. All right, let's see. Okay, so we have one comment here. So during Q&A, Powell said QT could happen at May meeting. Yeah, we talked about that. Let's see. Yeah, that's the 1.9% is the median. Obviously, there's going to be a deviation on that depending upon how Fed members see it, but 1.9% was the median. Let's see what else we got. Okay, so a question here: will EV stocks go up? Well, it's most EV stocks are Chinese stocks, or at least they have China. They touch China in some way, right? They sell in China or something like that. Based upon the China news we got today, yeah, absolutely. Let's go. So TSLA up 4%. Let's see if we can pull up LI Li Auto. Up 30%, XPeng, XPEV up 30%. And then, of course, NEO, if you guys missed that one, up 25%. Yeah, EVs are going up. No doubt about that. Okay, thank you so much for that, Gillian. I really appreciate it. Rich, it's my pleasure. I really appreciate you sticking around, listening to everything I have to say. I really, really appreciate you guys. Um, okay, let's see what else we've got. Let's see what this comment says. Neo and Baba Chinese stocks went up too fast today, 10 to 20%. So expect profit taking. Yeah, it was actually more like 20 to 40%. Uh, Profit taking, we'll see. We'll see. I don't know. This could be a new bull run for these stocks. If there was going to be any profit taking, it probably happened this morning. A lot of people are still down a lot of money on these stocks. I mean, look at the chart. You just have this massive, massive drop over the past couple of months. I just want to make this chart a little bigger for you guys, if I can. There we go. So, I mean, you've got Neo's up around $40. There's people about this at $40, $50, $60 that are still holding. They're not going to sell because it went up to 18 bucks, right? They're just going to keep holding. So, we could see quite a big rise on these stocks. They're down so much money. I don't think we're going to get profit taking for quite a while. Let's see what else we've got. All right. Glad to see you guys appreciate my dad humor. At least, my kids and wife don't appreciate it, but I'm glad you guys do. Let's see. So, yeah, you said you're still holding on to Tesla. You like the company. Yeah, Tesla's a great, great company. I think, what is it, yesterday's video? I said it was looking really, or 2 days ago, the technicals were looking extremely bearish. I mean, this was looking really bad for Tesla 2 days ago. And then, man, after the China news and everything today, like, and oil prices drop, I mean, it just did a complete 180. So we'll have to see if this can maintain the bullishness that started down a little bit after hours. We're not above the 21-day EMA on Tesla. This is not rising up like the Chinese stocks were. This was more just like an overall market rise. So we'll see. We'll see if this actually can continue going higher, or if it's going to hit resistance here at the 21-day EMA and keep going down. I mean, it's been bouncing off the 21-day EMA for months now. I mean, all of January, all of February, and all of March, this bounced right off that 21-day EMA at this sort of light blue line here. And every single time it hit it, it came back down. So I don't know. Maybe this technical candle here will actually hold, and we will continue going down. But it's going to kind of depend upon what happens over the next 2 days. If we can break above this 21-day EMA, we'll get some bullishness on here. But right now, we just don't have really any confirmation of bullishness. We just have two green candles. So it's a big toss-up on TSLA right now. We'll have to see what happens. So this is interesting. So Fred says stocks moving up and down 10 to 20% every day is a bad thing. It's just a sign of volatility. It's what happens during bear markets. It's really common during a bear market. It just means that, bear markets will continue. Let's just talk about this real fast. This comment comes in relation to me talking about the, wages not going up as much as inflation, not being bad for employees, obviously. I really, I own a couple of businesses. You guys might not know this, but I do own a couple of businesses. I actually have a holding company, and I've got like 4 businesses in it. I would love to help you guys, be your own boss. I'm starting a new channel. I've been saying this for months. I just need to get the time. For those of you guys who don't know, I have a newborn baby. He's 4 months old. And ever since he was born, like, I have no time at all. None. This is why I'm getting 5 hours of sleep at night. Like, every waking moment, I'm with this baby. So I love you guys, but, baby kind of comes first. But eventually that baby will grow up and sleep through the night. No, he will sleep through the night. I'm telling you, he will. He will. I know he will. So once that starts happening and I'm able to get some sleep again, we'll get this channel going. But for those of you guys who want to check it out now, down in the link in the description, I think there's like a little about me or something. I've got a link to this channel, and this is where I'm going to be posting that business advice and kind of help you guys get your own business started. So it's the Scott Curry. If you guys want, it's youtube.com/real Scott Curry. I don't know if I have oh yeah, there you go. I do have one. So there's the link for it, youtube.com/realscottcurry. Okay, let's go through some more. Oh yeah, let's talk about gold stocks. So, gold stocks continue to do extremely well. They obviously got a big boost from the Russia-Ukraine war, but as I mentioned in a video about a month ago, when the Fed starts raising interest rates, gold stocks start to rise. And part of the reason is as interest rates go up, bond yields go up. Now, again, as bond yields go up, that means prices go down. And the only reason prices are going down is because people are selling them. So if people are selling out of bonds, a lot of people who buy bonds, they don't like to put their money into the stock market because they feel the stock market is too risky. So they just want to kind of have their money be a store of value. So what they'll end up doing is they'll have their money pulled out of bonds as yields go up and bond prices come down. They'll pull their money out of bonds and they'll stick it into gold. And that's one of the main reasons why gold stocks do so well while the Fed raises interest rates, is because so much money is being coming out of the bond market and going into gold. So gold stocks are great for a long-term hold. We continue to hold our gold stocks as well. Let me go through a few other things that maybe we haven't talked about yet. So many comments, man. You guys are amazing. I appreciate all you guys. Thank you guys so much. You guys are just absolutely amazing. Let's see. So, Froggy, you kind of bring up a good point. You say you don't trust China at all, especially with what's going on in the war. So obviously in my comments, I've been extremely bullish on China. But we should probably point out that there are still obviously some concerns with China, right? Even though China is saying, yeah, we're going to go ahead and support our U.S. listed ADR VIEs, and we're going to stop attacking our tech companies, and we're going to actually start promoting our economy. It's all that true. It's all that good. Obviously, there are still people who have trust issues with China, and a lot of that has to do with the fact that with the war going on right now, the U.S. has warned that if China were to support Russia with either military equipment or something like that, that the U.S. is going to start sanctioning China. And if that happens, goodbye stocks. That could be bad again. So, because basically what that'll do is, even though the FUD is gone, that's going to hurt the Chinese economy. And if the Chinese economy goes down, people aren't going to be going out buying $60,000 cars. So obviously stocks will go down. So you're absolutely right. It's not 100% good news. There is obviously, fears in the market. So we kind of have to, mention that. Oh my goodness. So we have John Lennon in the house. Guys, that's right. John Lennon. He is very, very famous. But he died, he got resurrected, and he came back under the name Penny Slayer. And basically he's a penny stock trader, and absolutely amazing guy. I mean, absolutely incredible. But what I wanted to kind of point out to you guys is John actually runs a Discord channel called Lucrum Investing. If you guys want to check out John's channel, it's you can go to stockcurry.vip/Discord. And guys, John Lennon, Penny Slayer now, he is an absolute genius when it comes to day trading. The guys over at Lucrum Investing have been absolutely killing at day trading. As I am not a day trader. I do day trade from time to time, but it's like maybe one trade a week. I am not a day trader. But the guys over at Lucrum Investing are. If you guys want to learn day trading, then this guy's got it going on. This guy is so smart. Can I blow this up? Yeah, cool. Over at Lucrum Investing, they are profitable on 80% of their trades. I'm not lying. 80% of their trades are profitable. Guys, I don't even have that kind of win rate. Nobody does. Well, Lucrum Investing does. I don't know how, but somehow they do. So if you guys want to go check it out, it's Lucrum. Just go to stockcurry.vip/Discord. You can sign up for Lucrum Investing. If you go through them, they got a 3-day free trial. If you go through me, you get a 7-day free trial. But you go check them out if you guys want to learn day trading. Okay. So thank you so much, John Penny Slayer, for joining. I really, really appreciate you. You're an amazing guy. And thank you so much for supporting the channel. Let's see what else we got. So isn't China facing a real estate crisis? Yeah, they are. But China has now come out and they say that they're going to basically spend money to help turn their real estate crisis around. So the big problem was with the whole Evergrande scandal and all that stuff, where the Chinese real estate was kind of falling apart. China is now committed to spending money to fix the economy. That's kind of one of the benefits of having a communist economy, I guess, is that the government can just spend a ton of money to fix their problems. So they are facing a real estate crisis, but China's committed to fixing it. So that's kind of what's going on there. I'm so happy that you're learning so much. Thank you so much, Imlo, for your kind comments. I really, really appreciate you. So I had a QQQ put. I told people in the VIP Discord on Monday that they might want to close it out. Quite a few people did close it out, and they made quite a bit of money. I decided to hold it. I told people it was going to be extremely risky, but I was like, it's long enough dated. I'm willing to take the risk. And man, that did not go my way at all. So, based upon the bullishness we're seeing, I think if we get another green day tomorrow, then it would definitely be time to close it out. Probably time to do a little bit of a short-term call option on QQQ to make some money as we go up. Because like I said, 3 out of the 4 indicators are bullish. We could turn around and go back down at any minute, but so far it's really bullish. Let's see. VIX, I don't know. I'm not following it right now, so I can't really talk about it. Let's see what else. Is it a good time to scale out of your basically commodity stocks? I think the time to scale was last week. We actually went short on oil through a CVX put option, and that is paying out really nicely for us right now. As I had mentioned in yesterday's video, quite a few people in the Discord closed it out for a 50 to 70% profit. Another person did IMPP, was up 188%. Most people have closed out of their, closed out of the long positions last week. We actually went short and made money on the way down. I think it's a little late, but it's up to you. One thing I do want to point out, though, and I'll just use oil to kind of point this out. Let's see if I can get back to it. Let's see, go back. Oil. So even though we made money on the way down, I think the downturn might be ending here. If you go back to December, long before the whole Russia-Ukraine crisis, you can see, and I can't draw a trend line on here, but you can see a very steady trend line up. Now, we had a big spike up, which came back down, but notice that we're back down to the trend line that kind of started in December. So the trend line that's been going on for the last 3 months, we're back down to it. So, if you did not close out of your positions yet, I don't think we have a lot more to go down. I think we're probably about as low as we're going to go, and we'll probably just slowly start going back up from here. So I don't know, maybe not close out of those commodities. Maybe just hold on to them and take the longer trend up. That's that. Let's see what else we got. Oh yeah, sorry, bank stocks. Yes, bank stocks are going to do extremely well because as interest rates rise, they're just going to make more and more and more and more money. FAS, which is a 3 times leverage bank ETF, was up 9% today, and it had a golden cross on the MACD. FAS is a great 3 times leverage ETF to buy if you want to make a lot of money on the banking stocks. I actually own FAS, and as well as a few banks like Goldman Sachs and Citigroup. Bank stocks are another good one. Thank you so much, AOW, for bringing that up. I forgot about bank stocks. Let's keep going. You're really appreciative for the summary, guys. It's my pleasure. I just love giving you guys all this information. Oh man, guys, we are almost at an hour. I have to cut this off before an hour. I'm not going to be able to do the replay, so I'm gonna have to wrap this up really fast. We're gonna get through the last of the comments as fast as I can. Hello, VIP family. Thank you, guys. Everybody's a member of the VIP Discord. I just appreciate you guys so much. You keep me going. I mean, it's $20 a month, and I know it's a lot of money for some people, but my goal is to give you one trade a week that you can make more than $20 on, hopefully hundreds of dollars on, and way more make up for your membership. That's my goal. So thank you guys so much, VIP Discord family. You keep me going, and it's my hope that I can keep you guys going and help you guys get even more. Okay, sorry. Quick clarification on this. Okay, got to get to this in the last few seconds, and then we got to end it. So A 7-day free trial is on the Lucrum Investing VIP Discord. 7-day free on Lucrum Investing. There is no free trial on my VIP Discord. So just very clear on that. No free trial on my VIP Discord. There is a 7-day free trial on Lucrum Investing Discord. Okay, guys, we're at 1 hour. I've got to end it right here. Thank you guys so much for joining. I appreciate all of you. Have a wonderful night, and we will